All right, let's talk about risk for a bit. Allie, let's just kind of start with you. Like, all right, all this has happened. The traditional way that home builders bought lumber was they went to their lumber vendor and they put in their order, and it seemed like the vendor took on all the risk. Now there's probably been people that have been crushed because of that risk. So let's just talk about risk, and we'll go from homes to sawmills to trading. Like, how is risk going to reorient itself around the industry going forward? And like, what do you expect home builders to be doing that maybe they haven't been doing in the past? And Stinson, ask smart questions along the way that you know how to ask in this kind of category.
I gotcha. Go ahead. Yeah. Allie, have you seen, this is something I was excited to talk to you about, it would be fairly recent, like within the last quarter, how home builders are getting priced as far as fixed pricing, price time of shipment, and are they seeing a change in how their suppliers are managing the price risk?
So what I've heard from the purchasing agents, and I will be completely transparent that I'm not in the conversations with the purchasing teams on a regular basis. So this is me kind of parroting a few things that I've heard. But what I've heard is they haven't seen any impact of, and I know it's the futures market, they haven't seen any change on what they're able to buy today. The pricing is becoming even more unstable for them. They really just don't have a sense of it, and that's really stressing everyone out. From a builder's perspective on the risks, some of them are warehousing lumber because at least they have a sense of what the costs are going to be when they buy them. But what I would say is what I've heard is it feels like they have a far less grasp, and the what they used to be able to buy, I think it was how many months it was, they don't have that anymore. There's just like what you right now is what you're paying, and it seems like that is a lot.
That's really interesting, and it's kind of what I thought would be a natural progression, because before home builders would get 60 to 90 day, like quarterly price, like this is your price the entire quarter, and we'll ship it when you need it. And if you've done that the last 12 months, effectively, you've lost money if you're a vendor. So it's really interesting to hear that they're actually owning wood and warehousing it. And I personally think they're going to be forced to become much more in tune with the lumber market than they have in the past, because no one wants to lock in prices or overpromise and overcommit. So have you found the different size builders, or are all builders kind of giving that same feedback? The one caveat is the biggest builders are going to get the best service. And like you said, they're on allocation. They're going to get the most allocations. Are they also kind of feeling some pushback on how they're forecasting prices through their vendor?
Well, and it's a good point that you brought up the different size of the builders too, because it's definitely not the privates that are able to warehouse some of the lumber. It's going to be the bigger guys that are going to actually have that space, and they're going to be able to move forward with that. We do talk to privates as much as we talk to publics, and I wouldn't say that it was like, oh, wow, that's a discernible difference, like a huge difference between the two. I think you're right that probably the publics, for everything, that includes the electroners, the framers, the window suppliers, all of them are going to give the publics the better deal, the better access. But I wouldn't say it's been, wow, that's obvious that it's public or privates.
Yeah. That's just such a significant change in how lumber's traded, and how risk is transferred in the supply chain. I think, Dustin, as a trader, mills never want to lock in 3-month pricing or 6-month or 12 months. Like, they just want to sell 4-week clips. And if they sell beyond that, well, what if prices are higher and I locked it in 8 weeks ago? Shame on me. Because home builders on one end, where their world's turning upside down from a risk perspective, and sawmills are on the other. What are they saying about risk management, hedging, forecasting, and quote unquote taking advantage of these historically high prices? What's kind of the narrative out of the mills?
I don't really hear a lot of sort of changes in approach in terms of hedging, or, you're right. The industry historically has kind of rolled with the cash market and not really done a lot of hedging. I mean, certainly, I know it raised a few eyebrows. I think the last quarterly earnings, you did see some of the major publicly traded companies that, sawmillers that that did have some hedging positions that they obviously sort of kind of hurt their earnings to some degree. I mean, they still had good earnings in my view, but I'm not sure that. I really don't know if there's been a mindset change there from a risk management perspective.
I mean, it would be highly disciplined for all of a sudden. I don't know if that's the right word, but it would be weird for the greedy side of this cycle to be like, we should manage our risk and protect the downside.
I mean, the industry has had such a tough go, right? And I know it's, this is not meant to be a sob story for sawmills, because I know everyone probably listening to this is saying, hey, these guys are making a ton of money. But realistically, the last, 10, 15 years have been a really tough go for the industry outside of, say, 2017, 2018, where there was a good little price run there. Prices are historically low on an inflation adjusted basis for lumber. So, I think, for some of them, I think they just see this as like, hey, this is about time that we're finally making money in the cash market. Why would we, try and, go hedge ourselves out of this here? That said, we're at a point here where, $1,500, $1,600, $1,700 per thousand wood. I mean, that's clearly not going to be sustained, right? So you would think there would be a point where mills would say, well, let's kind of, sell ourselves out a few quarters out here and take advantage of this and maybe manage our risk. And I think, some may do that, but, I don't know. The industry has historically not gone that way. I wouldn't expect them to change overnight.
Yeah, that's I think the same thing from their mindset. I mean, they're just, they say on market. We're just always on market every day, every week, and it feels like the stock market, which I'm not a stock market trader, but they get penalized for hedging on an up market, and then they don't hedge, and the market rolls over, and they get penalized again. So none of them. So that's just like, just don't hedge at all, which I don't think is wrong. You either need to hedge all the time or don't hedge at all. Because of that, and part of the consolidation of the industry, there's so much risk. The mills effectively don't take any price risk. They're just selling on the market. Home builders have been spoiled up to this point of getting real nice fixed pricing. And then all of us in the middle have tried to figure out who's going to offer the fixed price, because someone's on the other side of that home builder who has 90-day pricing. And it's not the sawmill we just established. So it's the pro dealers, the lumber yards like Builders First Source, 84 Lumber, Carter Lumber, and they commit to home builders traditionally 90-day pricing, and they can at most have 45 days of inventory on the ground as a company. So they're naked the second half of that commitment. And their guess is, sometimes they'll lose money on the second half, sometimes they'll make money, but they definitely price that first tranche of inventory is profitable, and then they kind of wing it the second half. And you can imagine what that's done. That model has done, again, for like 12 months. We've been going straight up, and more acutely so recently. And when Builders First Source bought BMC, that, to me, Ali, eliminated options for these big builders. Like the big public builders, there are not very many lumber yards that can service them in the way they need to be serviced. They need big, giant lumber yards like Builders First Source to face D.R. Horton. And this is me just guessing, just understanding how traders and markets work. D.R. Horton would say, hey, BFS, give us a 90-day price. And BFS internally is bullish, so they're going to keep their price on the higher side. And D.R. Horton says, let me go shop this to BMC. And BMC is like, we got a chance to get D.R. Horton. Let's undercut everyone. Maybe we'll make money, but we got all this market share with the new customer. Well, now there's one less large supplier option for the builder to go to. So I just have been suspecting that risk transfer, they're going to put more risk on the home builders. And I don't think they're prepared for it. I don't know how material of a difference that will make. But if they're getting 2-week pricing or 7 day, this price is only good for 7 days, they're going to have to be lumber experts, which they just haven't had to have that expertise in this cycle, at least.
And I think
it's going to be an interesting dynamic. Go ahead.
And I think kind of one thing that's been taken for granted, and it's not just home builders, it's industrial packaging buyers of lumber, I think the assumption has always been lumber is an abundant, cheap commodity. And so why would I spend time managing risk on something that is abundant and cheap, right? And I think, one thing we've been telling clients over the last few years is that, and this is even pre-COVID, that we've seen that, and some of this reflects some of this consolidation of that we're seeing at the wholesale and sort of pro dealer level in the industry. We've seen that the inventory on hand relative to demand has been dropping over the years. And some of that, I think, is this sort of idea of just-in-time delivery and let's free up working capital and, kind of more professionally sort of managed operations. And I think, clearly, that is, that's kind of set us up for volatility in the market. And, we didn't see it really in 2019, which, but it's, reared its ugly head in 2020 in a big way with this kind of black swan event with COVID. So that is kind of how we've set ourselves up for this industry volatility going forward.
And I want to take that risk discussion and bring it a different direction for the builders too. And it was Chris's, one of your original questions was about what are the builders going to do if the futures come true and lumber costs go down a little bit in the future? Are builders going to just adjust that, or are they going to have those nice, fat margins? And one of the things that you have to think about too is if we're talking about how builders have sold so many homes that are not yet started, and then all of a sudden, let's just say lumber prices come down and all of a sudden the builder can build it cheaper, they can't drop their price because they have so many people in backlog that have paid for that top line price that they can't adjust it down. The risk that poses goes back to the price ceiling though, because they're pushing up the prices to account for how their costs have gone up so much today. So do you try to adjust? They're not going to drop their prices. I think it would take a lot of different steps for builders to have to adjust their prices, but that's a risk that they're then handling, is how do consumers continue to react to the higher prices? And how do you consider the people that have already put in a contract and you want to make sure they close? Because to Stinson's earlier point, they're building these homes and they don't want to take on the risk that home gets built and there's not a buyer sitting there too.
Yeah, I was just in El Paso and I talked to a home builder that has 1,200 homes. He's just starting a new community. All 1,200 are pre-sold. He hadn't started one of them yet. So that was interesting. Allie, can you just speak a little bit more to major publics versus maybe your smaller regional builder that builds maybe a few hundred homes a year? Like, is this just a short-term thing and competition will remain, or are there any long-lasting effects on how the majors or how the smaller companies will be able to compete against the majors?
Yeah, and I won't be able to answer it specifically to lumber, but just in the overall marketplace, what we're seeing is that the publics are volume, and backfill the lot supply and pay what you need to for land prices. And the phrase that I've heard is that generally it's the publics that can pay quote unquote stupid land prices. So they can go out and they need to backfill. So they're going to drive up those land prices. If you're a private, it's a lot harder for you to be as competitive. And so we have had conversations with a lot of the publics of, hey, we're going to go into a new market, or hey, we want to find a builder that we want to acquire so we can get foothold in a different market. And so we're seeing a lot of consolidation, or at least discussion of consolidation, because right now to be competitive, you do really need to be one of the big guys. Going back to the conversations too, it's not only your access to lots, it's your access to labor. They want to work with you because you're going to have more developments and you're going to have more job stability. And it goes back to just getting access to bricks, getting access to electrical wire, to cabinets. If you have scale, you're in a better position.
Yep.
And that's true in the lumber supply chain as a whole as well, because there's so much scarcity. If you're the biggest, you get first look, and you fight it out from there. But the scale has such huge advantages in these markets.
Well,
these go ahead.
Yeah, no, and I was just going to say, Stinson, the way we've kind of seen that too with lumber, that's in this sort of channel shifting from the traditional supply chain, the wholesaler distributor, to the Home Depots and the Lowe's of the world, right? The sort of big box stores. And, they take priority for the mills in a lot of, not all cases, but a lot of cases, they tend to pay more. They have huge volumes. And that's kind of a twist that's also been added in here to this whole supply chain story. And it's kind of left the traditional part of the supply chain for home builders and large contractors in a tough spot here. So
yeah, that's such a good point that I don't think outsiders understand. Lowe's and Home Depot and Menards, I guess it was 1, 2, and 3, are massive, and they'll go directly to the mill. They'll have these contracts, and the mill likes it because they just got one counterparty, and they can just lay off all their production. It's effectively their way of hedging. They're not locking in price, but they're locking in volumes. And the last thing the mill wants is to accumulate inventory and not be able to sell it. And that's when they get too much inventory, at least. That's when they get in trouble. So having these guaranteed outlets makes them feel really comfortable that they have kind of guaranteed customers. And what the point of outsiders maybe not understanding this is single family. If you see it on the shelf in Home Depot and you can buy it, that's one less bundle that a home builder, D.R. Horton, cannot buy. They do not get supplied by Home Depot currently. There's weird things going on with folks kind of going in there trying to buy in Home Depot and Lowe's. Home Depot is kind of a proxy for all big box stores, like turning down bulk sales that are ultimately going to resale, or they just won't sell the volumes. So they increase their volumes, and that if you just say there's 100 rail cars committed to the U.S., 50% of that is repair and remodel, right, Dustin?
In terms of demand, repair and remodel for lumber, softwood lumber demand, it's a little over 40% of demand. And compared to residential construction, new residential construction, that's like a third of demand. So let's say like 33%.
So a surprisingly large amount of Canadian production, over 40%, goes to repair and remodel, which effectively is big box stores. Not all of it, but most of it. And if they increase that all, you're talking like every rail car that got committed to Lowe's is one less rail car that's going to go to supply a single family home in the way the current supply chains are structured. And so with a big bump, and I don't know if they talked about it on the earnings call. I did see a quote from Lowe's that they expanded their vendor base to go find more inventory of lumber. That has really pinched the single family home supply chain because they're different. The supply chain that you and I go walk into Home Depot to build a chicken coop, that's like less wood available to go build homes. So it's been a really interesting dynamic this year.
Yeah, and I think the key here too is normally if production was able to expand, right, no big deal. If the box stores, which had a banner year in terms of lumber and panel sales last year with all the DIY activity and the stimulus checks, and they stocked 2021 accordingly. If we had normal production conditions where we weren't constrained from a labor perspective and, we had a little extra spare capacity, no big deal. But given all the supply chain chaos and, some of the long-term structural issues for lumber, that's been a problem, to Stinson's point, for the wholesale pro dealer channel, for sure, for acquiring wood. And that's, again, problematic for your home builders. And it's showing up in what the market price is for wood.
Yeah,
so that's one. Go ahead, Allie. Sorry.
Oh, sorry. I was going to say, well, first, Stinson, you're speaking my language because the first time I ever built a home was building my chicken coop back in Ohio for my chickens. But all of that to say, I wanted to stick on the theme real quick on when you were saying what the outsiders don't know for the industry. And I think one of the most important things, and I know we're all connected on Twitter, so you guys see me share it a lot, but right now, because of all of the different capacity constraints, 93% of builders are intentionally slowing their sales. And 40% of builders said their sales had slowed from April to May. And that data is as of today. But when you go into the comments, they all say, by design, we're limiting capacity or we've completely stopped. And I think as we're trying to look at, well, is there going to continue to be demand? You may start to see in the coming months, housing data actually doesn't look good and looks actually a little bit alarming, probably over the next 4 or 5 months. You have to understand kind of the nuances within the home building industry that when they are facing all of these struggles, they have to adjust their strategy accordingly too. And I think that's lost if you're not in the industry.
Chris, I think that's your cold open, bro.
I know.
That's a great intro. That was great. Yeah, earmark that one.
I got it.
Because I said this the other day, and I got it from you, Allie. I think I gave you credit on Joe's show Friday. it's not bearish. I said it's not bullish, but it's not necessarily bearish. We're just kind of hitting capacity constraints, which we've hit on, and a lot of these aren't new ideas that we're bringing to the public. There's just supply constraints, but the data, you're going to have some context, but the demand is there. And to me, a leading indicator could be if DIY business slows down. Justin has said in the past it seasonally peaks here in the next week. That'll be more wood pushed into the traditional single family home supply chain. So we could see more capacity. I don't know how to say it. Capacity increases the second half of the year from a lumber perspective, purely because the repair and remodel starts to wind down. So maybe that could bolster some starts as well.